What if I told you the biggest difference between people who build wealth through real estate and people who never get started has nothing to do with how much money they have? It starts with mindset. Because the same property can look like a problem to one person and a wealth building opportunity to another. Today, we're flipping that switch. Welcome to Real Estate Investing with Nicole. Today, we're going to change the way you look at property. Because once you learn to think like an investor, you stop asking, do I like this house? And start asking, what can this asset do for my future? We're not just looking at houses today. We're looking at deals. And before we can decide what makes a good deal, we need to understand the investor mindset. Picture this. 4 people are standing in front of the exact same duplex. One sees stress, one sees work, one sees a deal, and one sees retirement income. Same bricks, same roof, same address, 4 completely different futures. So what changed? Not the property, it's the perspective. That's the key difference. A consumer reacts emotionally, and an investor evaluates strategically. As I often tell my clients, real estate investing is not one size fits all. It has to fit your goals, your numbers, and your long-term plan. A typical homebuyer might get stuck on an outdated backsplash, worn carpet, or the wrong paint color. An investor looks past all of that and asks one powerful question. What can this property do for me financially? And this is where investing becomes personal. Every investor brings a different goal, a different risk tolerance, a different timeline, and a different version of success. So let's walk back to that duplex and look at it through 3 investor lenses. First, we'll look at the consumer. For a consumer, it's a fixer-upper with ugly wallpaper. But our 3 investors, it becomes 3 completely different opportunities. First, meet Discount Dan. Dan walks up to the duplex and barely notices the wallpaper. While everyone else is reacting to the peeling paint and tired kitchen, Dan is already running the numbers in his head. He's comparing the asking price to the property's estimated market value and asking himself, where is the gap? You can almost hear him say, ugly wallpaper, perfect. That just means fewer people are bidding against me. To Dan, this is not an ugly duplex. It may be an asset on sale because the property is distressed or the seller is highly motivated. He is hunting for instant equity, profit potential that can exist the moment he signs the agreement of purchase and sale. Then there's renovating Rita. Rita walks through the same duplex and starts mentally moving walls. She's not discouraged by the cramped layout or unfinished basement. She's asking, what could this become? In her mind, she's already saying, if this wall could talk, I'd ask it to move 6 feet to the left. Maybe the floor plan can be improved. Maybe the basement can be converted. Maybe zoning allows for additional unit. Rita is focused on forced appreciation, which means she is not waiting for the market to make her money. She's looking for ways to actively create value in the property. Now let's look at John and Sarah. They're a couple in their early 30s, and they're standing in front of the same duplex. But they are picturing a very different future. They see tenants helping to pay down the mortgage month after month. They see steady cash flow building confidence. You might hear them say, "We're not buying this for the wallpaper. We're buying this so we can sleep better at night." They see an asset that could one day help fund their retirement, support their children's education, or create more choices for their family. They're not chasing a quick flip. They are building a 20-year plan. So, what's the common thread? Do you see the pattern? They're different goals, different strategies, same mindset shift. Each investor stopped thinking like a consumer and started thinking like an asset manager. They understand how to use leverage or other people's money to control a larger asset with less of their own capital and potentially increase their returns. So, in summary, Disco Dan was looking for instant equity by buying below market value. Renovating Rita creates value through improvements and forced appreciation. John and Sarah focus on cash flow, mortgage paydown, and long-term legacy building. Together, they show how the same property can serve different investor goals. That's why no two real estate investments are exactly alike. One investor may want inflation protection, another may be focused on tax planning, such as capital cost allowance, another may want reliable monthly cash flow. My role as a real estate agent is not simply to unlock doors and point out nice kitchen. It's to be a strategic ally who helps each investor connect the right numbers to the right opportunity. Now, before we get into the how, let's talk about the why. Because the market itself is telling us something important. North America is moving towards what many call a nation of renters. And I say North America, but this includes Canada. And the 2021 Statistics Canada census helps explain why this matters. About 1/3 of Canadians are renting, and that's probably increased since the last census. Ontario has some of the highest rents in the country, with Toronto among the most expensive rental markets. Almost 60% of people who have immigrated to Canada in the last 5 years are renting, and that's a lot of people. And over 40% of homes built between 2016 and 2021, so that's in the last 10 years, are occupied by renters. So obviously, this is not a passing trend. It is being shaped by high ownership costs, elevated interest rates, and wages that have struggled to keep up with inflation. For investors who understand the numbers, growing rental demand is not just a statistic, it is a signal. So, who is the real estate investor? It's not someone who owns property, it's someone who puts capital into real estate with intention. They want to generate income, they want to create appreciation, and they want to build long-term net worth. A consumer may ask, could I live here? An investor will ask, will this asset move me closer to my financial goals? That one question changes everything. For an investor, a property is not just a place, it's a financial vehicle. And the decision is driven by numbers, risk, return, and profitability potential. Let's go back to Rita for a moment. Rita was not looking for granite countertops or the perfect primary bedroom. She was looking for a property that could diversify her portfolio and generate passive income. She understood that wealth is rarely built by accident. It's built by strategy. With the right guidance, Rita moved beyond the simple idea of buy low and sell high and started looking at the full investment picture. And if you want to think like an investor, you need to speak the language. So let's break down 3 terms you will hear again and again. These are important terms for you to understand as a real estate investor. The first one, cash flow. This is the money left over after the operating costs, the mortgage payments, and other obligations are paid. Think of it as the breathing room in the investment. Positive cash flow helps reduce risk and gives you a cushion when costs rise. Next term, instant equity. This is the value gap created when you buy a property below its estimated market value. In simple terms, it's finding the opportunity before everyone else sees it. That's Discount Dan for you. OPM, or other people's money, aka otherwise known as leverage. This is the power of leverage. By using borrowed funds, such as a mortgage, you can control the full value of an asset while contributing only part of the purchase price. That's how investors can scale faster and benefit from appreciation on a larger portfolio. Rita used these tools to choose a forced appreciation strategy. Instead of hoping the market would rise, she searched for a property where smart improvements could actively increase the value of that investment. So let's talk about building your strategy or your legacy. As we wrap up, I want you to pause and picture your own financial future. Where do you want to be in 5, 10, or 20 years? Do you plan for a comfortable retirement, family security, or passing on generational wealth? Because investors do not just shop for houses, they build a plan. They qualify opportunities based on risk tolerance, goals, and timelines. They surround themselves with the right team, including mortgage brokers, lawyers, contractors, real estate professionals, and other professionals who help move each deal closer to the bigger goal. So if financial freedom is the goal, the shift starts here. Stop looking only for a place to live and start looking for an asset that can work for you while you build the life you want. Because real estate investing, as I say, is not a one-size-fits-all. Every deal should be matched to the investor's objectives, financial capability, risk tolerance, and long-term goals. And my goal is to be your strategic ally, helping you understand the numbers, identify the right opportunities, and make decisions that support your future, your family, and the wealth you want to build. Before the next episode, here's your challenge. Look at one property listing this week and ask yourself, what would Discount Dan, Renovating Rita, or John and Sarah see here? Then, in the next episode, we'll dive into the profit centers and break down the specific ways wealth can multiply in this market. Thanks for listening to Real Estate Investing with Nicole. If today's episode helped you start thinking more like an investor, make sure to follow the show and share it with someone who's ready to look at real estate differently. And if you're curious about what kind of investment strategy could work for you in the Toronto market, reach out. Let's look at the numbers together. Remember, real estate is not about luck. It's about strategy. And when you understand the investor mindset, you stop seeing properties as expenses and start seeing them as possibilities. The future you want to build may begin with the next opportunity you choose to see differently. If you enjoyed this episode, please leave a rating or a review. And what really helps, if you could share this episode with one friend. Thank you and see you next time.